All right, everybody, welcome to Brighter. So some important news came out about Ford recently. We're going to find out whether or not this is a death blow for them or this is just a speed bump. First of all, Ford hit the brakes on a planned $3.5 billion battery plant in Michigan. And then recently, top Ford executives were heard to say that the 300 to 500,000 supplier workers may face layoffs because of this ongoing strike. And apparently, they also halted the production of the Ford F-150 Lightning, canceling orders in Canada. Now, the latest data is showing that the EV sales in the first 6 months of 2023, it's showing that Tesla's outsold its next 19 rivals combined by a wide margin. And so the question really is, if these rivals like Ford aren't able to build enough volumes, how can they afford to produce these factories that they need to do and sustain their investments? So we want to know from Jeff Lutz here, is this a death blow or is this something that is just a speed bump? Welcome, Jeff. How are you doing?
Great to be with you, Herbert.
So many might know that Jeff is a C-level supply chain and quality assurance executive. He's worked at Lenovo, Motorola, Google, and now he's running his own consulting firm. So let's get started with this bit of news here, Jeff, that the Ford top executives, one of the things they said was 300 to 500,000 supplier workers, they may face layoffs in the wake of the ongoing UAW strikes. And you said the coast won't be clear after the UAW strike is resolved, especially if you look at the loan and credit economy, which is being wrecked in the background. Stats don't lie. So if we take a look at this, in addition to the whole union situation, the credit card rates is really high. And so auto loan rates are creeping up higher. Auto loan rejection rates are rising higher. And these are the kind of charts to show that. Interest rates on credit cards going up, interest rates on auto loans going up, and then the commercial bank auto loan is highest since 2008, and then even worse, auto loan rejection rate is skyrocketing up as well. So tell me how all this comes together, Jeff.
Yeah, those charts are great. Jay Singh does a great job of that special situation site on Twitter. What it's showing you is that the marginal cost of owning a vehicle, greater than 80% of people, when they go to transact and to purchase a vehicle, they're using financing to do it. And so when the rates have gone, you can just take the average cost of a vehicle and look at what would the monthly rate be. Sure, I should do that at some point at the old rates, versus where they are today. And that's one of the things you've heard from Elon is people have only so much money to spend on a vehicle. And especially with inflation and other goods costing more, they have less of their budget to be able to spend on a vehicle. So that's why he's been out ahead of this, and Tesla has been out ahead of this, taking their pricing down and their cost structure down to be able to deal with that. And I think they're going to be on the right side of history. And then in that bottom right chart where they show the auto loan rejection rate, that's at more than a 10-year high in terms of the number of people that go apply for a loan and they're not qualified or they're rejected for a loan, because banks are actually, it's not that people's earnings power necessarily have degraded or they don't make enough money. It's just banks are actually tightening up in terms of their lending standards, based on what's going on with rates and the economy. So yeah, how this whole thing comes together is, this whole UAW strike is happening in the background, and, whatever deal is being progressed towards, and again, you can't just look at the wage rates alone. You got to look at the pensions. You have to look at the 4-day work week. You have to look at cost of living adjustments. All these things that are all factored together actually could even be much bigger than the wage increases alone. When they get to the other side of this, they're going to be paying workers a lot more in compensation. Again, don't think of just the hourly wage rate. So these auto companies, and Ford in this example, have to look at what are the things that they're working on now that are either currently in production or for the future that don't have the greatest return on invested capital. ROIC is a very important metric. Also, return on labor investment as well is another way to look at it. And they have to take those things that don't have the greatest return and they got to cut them, or they got to pause them and reassess them. And this also gives them some leverage too in those individual deals. So the cattle factory, the $3.5 billion that factory they're doing in Michigan with in partnership with cattle, they put that on hold. Well, UAW was looking at that like that was an opportunity for them to unionize that factory and get more union headcount or membership into the union. So that's partly a negotiation tactic, but partly I think it's Ford looking at the economics of building an EV. And they were already at, if you look at the last quarter, they were basically stuffing about $60,000 in every Mustang Mach-E and Ford F-150 that Lightning that they shipped, in terms of that's what they were losing per vehicle. You physically think of them, having a bag of money and shoving it in the glove compartment box or under the seat in the car. That's what they were actually doing in dollars lost per vehicle. So now they're like, okay, in the future, I'm going to have to be paying my labor this much more in terms of total man hours to build a vehicle. And they have to look at these. I think the three things they looked at, and this has happened over a number of months. One is they looked at charging. And I think Mary Barra, I know we're switching to GM for a minute, but she estimated they were going to spend somewhere between $400 and $500 million to invest into building out their own charging network, either investing in companies like Electrify America or building out their own chargers. So they did the partnership with Tesla, put that on hold. Now you have Ford with the cattle factory, putting that on hold. And now you've got the Ford F-150. We're seeing not only rumors, we're seeing actual emails of multiple reservation holders. These are people that ordered a new vehicle, and the response from Ford, either to the dealer or to the person, was, we're halting production on this. I don't know if it's end of life or if it's just a temporary hold. But again, another low margin aspect of Ford's business. They want to put those lower margin aspects of their business on hold, even though they actually increased to the street. They actually increased their projected earnings loss from EV, I think from $3 to $4.5 billion for the year. But they want to take those things that are going to be potentially lower margin and put them on hold. That's what's happening.
Lots of things putting on hold. So what you just explained is so many things are happening to Ford. Not only the union, of course, is hitting them hard. Their suppliers have to lay off people. They need to shut down factories and maybe even shut down, like you were just saying about Ford F-150. So here's the news that you just talked about. Ford announced that they're going to have to hit the brakes on a plant, $3.5 billion battery plant in Michigan. This is really not only a challenge for Ford, but a lot of the rivals, if they have low volume, unprofitable niches and they're not selling enough, how can they continue to afford all these investments? And this is the article saying that global automakers are launching scores of new electric vehicles, right? They're pouring billions of dollars, but few of them, besides Tesla, are selling high enough volume to support a full-scale assembly plants. This is something you know quite a bit about since you've managed factories and large volume sales of products in the past. So if you look at the first 6 months of 2023, Tesla outsold its next 19 competitors by 10 to 1, more and more during the first half. This is a beautiful chart for the first 6 months of 2023. Tesla's in the top green here, selling 325,000. And then everyone else. The next is Chevy. Ford is there. And then the rest. It's just tiny little numbers as we're talking about here. And then the other thing you just talked about is there are these comments now. This guy, Najib, is a salesperson for Ford in Canada. And he's basically emailed back telling the customer that that he's actually confirmed with management, and appears that Ford has actually canceled all of the incoming F-150 Lightnings that were getting built. This unit was incoming as well. So this customer is not going to get it anymore. Yeah, we just got confirmation from Ford yesterday evening that all of our incoming Lightnings are no longer being built. Jeff,
and
what are you thinking? Is this temporary? Is it significant? Yeah.
I think it's temporary. Ford has to produce an electric truck until they can get to their next version, which is probably going to be 2025 or 2026. When they get to the new version where they can simplify the assembly of it and hopefully get greater gross margins on it. So, but I do think they're looking again at lower gross margin opportunities, and they're putting them on hold, or they're putting the clamps down. And there's going to be kind of a quiet, there's this term of like quiet quitting. There's going to be this quiet like lack of production I think you're going to see of EV, because again, when GM, Ford, and Stellantis come back from the negotiating table, they're going to be in a weaker position regardless of what deal they agree to, a much weaker position from a unit economics perspective. And I think that's the situation they're in. The other thing you touched on earlier, Herbert, and we didn't spend time on it, the 300 to 500,000 labor at risk that Ford called out. It's by some estimates greater than over 1 million or more jobs that are connected to the auto industry in the U.S. that aren't in this UAW total that we've heard about in the past. And these are the suppliers. These are the things that feed these companies. These are the financing arms and banks and so forth that feed these U.S. auto companies. And I want to touch upon a couple of things. So one, there's different tiers in a supply base. The tier one suppliers are usually larger suppliers. They've got a little bit of a better capital position. But I think we may see a tier one rollover and get into trouble here pretty quickly, depending on what mix of parts they're making. It's the tier twos and threes that I think are going to be in serious trouble. One is they're probably not unionized. They're not going to be protected in any way under this. And these companies have to furlough their workers, given the fact, like if Silverado is shut down, let's take an example, and you're the supplier doing the door handles for the Silverado, and that may be one of the biggest parts that they're doing. And if that part gets shut down, they have to either furlough or lay off workers. They actually don't want to do it. That's the other thing that's happening. A lot of the tier twos and threes that they don't want to lay off their unionized workers because it's going to be, in this economy, it's going to be difficult to actually get them back and train them because people are just going to go find another job and work somewhere else. So they're actually stuck trying to keep labor on as much as possible. But the tier twos and threes, I think, are at the most risk because they usually have a particular model or a particular part. And if that particular model or part are shut down at the OEM, they may roll over. They won't have enough cash. And the other thing is, a lot of them are termed unbankable, meaning a bank will come in and say, all right, one of these companies will say, look, hey, I'm having an issue during this strike and my business is shut down, but when it resumes, we should be fine. But then the bank's going to look at them, and remember, the banks in the background, they've been tightening their lending standards. They're going to look and say, well, you only have this part on this product and it's on an ICE vehicle and it may be going end of life. So a lot of them may actually be unbankable. So that 300 to 500K layoffs that Ford's talking about extended into their supply base, I can see that being real. It's not a scare tactic. And again, I think there could be a real risk with the tier 2 to 3 auto suppliers in the U.S.
Okay, quite a bit of activity happening. Hopefully this is not the death blow, and hopefully they'll survive this, but things are adding up. Thank you, Jeff. Appreciate you giving us your feedback there, especially given your background. Folks, follow Jeff at the Jeff Lutz on Twitter and X. Thank you very much, Jeff. Appreciate you.
Thanks.
If you can, please consider supporting this channel. It's a lot of work arranging all of these amazing interviews. I've created a website that is the most comprehensive resource for the Tesla investor. It has over 15 modules to keep you informed. Please check it out. Simply go to my website at herbertong.com. Thank you very much, and let's get brighter.